Cathy Wood and Tom Lee's stark predictions for the market, where they think tech is going, our favorite industries, cyclicals, as well as most importantly, how oil is going to affect our markets. So with that being said, let's jump into it and let's dive right into the video here.
Yeah, I mean, I think tech in general has actually held up really well, including software. It makes sense to us because, I'm going to make a counterintuitive statement. Higher oil is relatively good for U.S. equities because one, the U.S. is a net producer of oil, but as people worry about global growth slowing because of high oil, they want to own growth stocks, which actually makes them want to own the U.S. stock market because it is a growth index, especially the Mag 7 and software. So I actually think that this kind of makes sense. And I've heard the earlier conversation today. I'm also in the camp that I think we're making our bottom this month for the equity markets.
Okay. What about, we got Jefferies down 7%, Deutsche down about that much. A lot of people are.
And exactly that. We will potentially see the bottoming of the market this month, and we'll see his predictions coming up next.
Trying to look around, poke into where these private credit exposures and stuff might be. What would you say about that narrative right now, Tom?
Well, private credit's been a problem for some time. So I think it has been increasingly revealing, as Jamie Dimon said, more cockroaches. I do think it's probably not as systematic as we might fear. I know people carry the Lehman hammer and think that this is a repeat of the GFC. But again, there's a lot of reasons it's not a systematic one. It's just the size of the market's not nearly as large. But also things that look like credit stress aren't really signaling like they did in 2008. So I think it's hurting financials right now, but I don't think it's a broader problem for the market or the economy.
Cathy, you guys are looking, if I'm not mistaken, to kind of help the public get into more early stage growth companies. And we saw last week, Robinhood did something similar. They're IPOing a venture fund. And this comes against this backdrop where a lot of the kind of growthy companies have ended up in private markets and they don't go public anymore. Then I know the SEC has a big push to try to change that. But one of the problems, as you and others know, is that sometimes they don't perform that well. It's very risky. So could you just comment on the current state of affairs? Like the private markets have losses. You go in the public markets, people don't want losses, but they want access to growthy companies. Who can they feel confident will help give them the best of the bunch?
Yes, Kelly. Well, it's very interesting to be managing money at this time and to have managed money, very early portfolio manager, early in my years, in the tech and telecom bubble. It's night and day. There was no fear back then. And today there's extreme fear. And there are some reasons, understand that. But I believe, and this is going to fit into what Tom just said, I believe the market, when we look back, maybe at the end of this year, is going to be characterized as climbing a wall of worry. And of course, now with the war, there is another reason. There are another few bricks being put into that wall. This is a really good time to pick up on stocks that might be more volatile. Volatility in our world, it does not measure risk as much as it measures uncertainty. And I think the new technology is evolving today, and the way ARC does its research on these technologies to understand how they're going to scale and who's leading the pack, I think we're in a very good position. And the opportunities, this is a technology revolution, and we are not in an AI hype cycle. And we think it has miles to go. And
exactly. So great point by both of them. And I think there's definitely a lot of points from those that we can look at with Oracle, actually. So let's go ahead and pull up Oracle. And you might be asking like, oh, well, why are we going to pull up the Oracle stock here? And so Oracle, we've had some fantastic trades, especially over the past week. I've made a good amount of money. My group members as well have made a good amount of money, and it's been fantastic. Now, Oracle's gone through some ups and downs, so let's go to the year chart here. So you can see I was investing in Oracle around here. It's around 2025 in the midsummer, June, July, and it had a great run up. Now, granted, I held most of those shares. I did trim some profits. But if I zoom in here, you can see there's been a big drop off. Now, a lot of this was to do with different reasons of AI, and I'll be making a full video on that if you guys like. Just leave it down in the comments below. But with that being said, Oracle just had a fantastic little trade here. So we jumped in around this piece, around the 145, 146 range, and we saw some good growth, and then we sold. So we did a little swing trade on Oracle, but that's a fantastic opportunity that it doesn't mean because a super volatile stock is volatile that it's not a good company and a good stock to swing trade. Even if we look at the S&P, it's been primarily flat, like a kangaroo market is what I call it. So if you are selling puts on a company like this, it is fantastic, or excuse me, on the S&P 500, because look at this great support line right here. We can see the support line right at around the 6,600 mark. It's touched it a few times now, 1, 2, 3, 4, 5 times within the past 6 months. So that tells me if you're selling puts on the S&P, and what Tom Lee and Cathy Wood just said was, we're going to see the bottoming out pretty soon at some point in this month. And what's going to happen from there is we could see it up to 7,300, 7,400, 7,500 once it really breaks out off of that support level. If we look at the resistance level up here too, up at the 6,900 range, you can tell it wants to break past it. It really does. So buying puts on this, or excuse me, selling puts on this, and maybe even jumping into some long calls, so some leaps would be the move that I'm doing. And I'm going to come up with some trades at that pretty soon. So if you guys want to see that, just let me know down in the comments below. But with that being said, if you liked this video, make sure to leave a like as well. I'm trying to create some good content so you guys can stay up to date on the market and make a ton of money. That's what I want for you. I'm making a good amount over the past 2 years. I made tons of money in the market, and I want you guys to do the same. So we'll see you guys next time. Peace.